Hi, good morning, good afternoon. I'm Kevin McPartland, Head of Research for the Market Structure and Technology practice here at Coalition Greenwich. We're excited to have you all here today for a great conversation with Brad Levy, who is the CEO of Symphony. So really excited, Brad, to have you here this morning.
Yeah, thank you so much, Kevin. Just pleasure to be with you as always and see everybody sort of.
Sort of, yes. Like we said, next time hopefully in person. So just a little bit of housekeeping for everybody. If you're hearing an echo, make sure you're switched to computer audio or phone based on how you're dialed in. We will try to take questions, although it'll be hard if we miss you. If we don't get to your questions, then we will try to follow up with them after the fact. And we will be recording and redistributing this after as well. So keep an eye out for that. And so yeah, so with that, Brad, been in the industry for 30 years. You spent 20 years on the street, right? So you were a banker, e-commerce, strategic investments at Goldman, right? So you saw really the gamut of what goes on with inside the sort of the largest banking institutions, and then another decade as effectively an operator, right? So you spent a lot of time in market, obviously now CEO of Symphony. In the last 20 years of all of that, right, was very heavy, as we can see from your resume, right, very heavy in market structure and fintech, right, which is why we've known each other for all these years. Yeah, so you've done a lot of sort of buying, rolling up, integration. So I'm really excited to hear sort of what's next and what you've got planned for Symphony. So, why don't we jump in? So you've gone from banking to fintech. When you were coming out of college, sort of right, early mid 90s, did you ever imagine it would go this way in your career?
I guess I always thought of the technology end as being either important or interesting, or even was part of what I got involved in early and seemed to help me. So I just came out of school with an Excel Lotus capability. I understood printers and printer jams. I was a bit geeky and I like gadgets. So, and by 95, after I was in the banking side for 3 years, the Pentium chip hit and really changed a lot in terms of the speed increase of a personal computer. And, from that point on, I just sort of either said to myself or got pulled into these initiatives, including being the Y2K person at Goldman, moving that project forward, which was really fun. But I've just always kind of been involved in the tech space. And by early 2000s, it became a real thing. Obviously, the dot-com bubble came and went, but it was a much bigger deal than that. And now today, it's sort of everywhere and almost everything. So I felt quite right over the last 30 years. I'm not sure I planned it as much as I just felt the gravity in it, and it made sense for me to stick with a tech element throughout pretty much my whole career.
Yeah, well, that's how careers tend to work for sure. And back in those days, institutional fintech was this tiny little niche thing over to the side, but really now it's everywhere. It's very ingrained even with retail, the trading tech and capital markets, right? So it's become quite an interesting world that we're in now.
Yeah, and it's even hard to define fintech as a thing because it's only a word that's been used in the last 5. We've been involved in it for a long time now, and I think it's market infrastructure for me, with some being fintechs, which to me are a bit maybe even more retail or more point solution versus maybe platforms that are a bit more broad. But we're seeing the convergence of everything, whether it's retail and institutional, the globalization and then the fragmentation, the public and private markets, the digital asset world, the DeFi space coming on with what is referred to now as, I think, TradFi, traditional finance, classic. But these things don't happen overnight. The traditional finance world will never evaporate, and the digital asset world is quite relevant. So it just seems like all things are happening a bit more simultaneously now and are more impactful. But the trends have been on for 20 years. It's just more real.
Yeah, so on that note, so Symphony, so should we think of Symphony as a capital markets focused firm? Are you sort of in other verticals? Do you have plans to go into other verticals? How should we think about you?
Yeah, I think we've tried to coin a sort of an area of our space called tech for fin, which is, and we've seen this in other areas where when things initially go digital, you can see a broad digital platform get created, like maybe AOL or Craigslist, like something fairly broad. But then really when things take hold, they tend to go more vertical, with solutions that really are built for specific communities with certain, challenges or nuances. So we are a tech for fin, we're tech led and finance focused. We had a few years back looked at other verticals like the public sector, especially in highly encrypted worlds like the military or the healthcare industry. and some are a little bit adjacent to us as you get into insurance. But in the last year or two, we've really focused in on financial services, I would say, broader than maybe cap markets, which may be a bit more transactional and institutional wording. So from retail to high net worth, up through the most exotic, instrument created and traded between just a few parties in a swap. We're trying to cover that whole spectrum around the world, front, middle, back office, cross asset, and but taking a broad view of financial services as, say, 5 to 30 million people on the planet, including corporates that issue and care about FX, and retail, professional type traders, or even just retail traders that have an interest. So it's much broader than a few million folks for sure.
Yeah, no, it's an interesting way to think about it, right? We do think of financial markets as this, as sort of Wall Street or the city, but really it spans every part of life now, right? Right into everybody's home effectively. So that is a very, very big world for sure.
Yeah. And I've always taken the view that finance, in theory, in reality, finance is everything on the planet. So it really is underneath the whole world. Every industry depends on financial services. Wall Street itself is its own business, but the idea of cap markets and funding economies, and I started in the muni business, which was all about that. So I've always had that view that it's much broader than just the street, but now that's clearly been cracked open in the last few years. And even consumer tech is making its way into our space.
Yeah, muni bonds, buying school buses, and point of service in a local coffee shop, right? It all sort of rolls back into the same network, the same infrastructure. It's fascinating.
Absolutely.
And so to step back for a minute, so there's been a lot of new startups, but then also a lot of consolidation, M&A, right, over the last several years now, especially since the pandemic. So just so many good companies. Obviously, valuations are quite high in some cases now, although that shifted a little in the start of the year. So can you talk a little bit about that? Like, are valuations too high? Are there still good companies out there? And I know you guys have been out there. You've bought a lot. You're thinking probably about buying more. So would love your thoughts.
Yeah, I think, people do try to draw a line, or, it's like 2001 or 99. I do think there's a number of companies that will fail, and there's been too much. But pendulums swing in both directions, and you really, to get to the right middle ground, I don't know what the right answer is. It's really dependent on every moment in time. So, there's certainly a lot. And I think of things in cycles all the time. So if I think of 95 to 05, right, personal compute ramp with Pentiums through lots of active trading in equities. And if you kind of bookended, it was like 95 to 05 was this boom consolidation in equities and exchanges that we lived through, where a lot of equities markets got transformed, regulators did some things, and exchanges consolidated dramatically over that period. If you look to the year 2000, when I really started in my kind of e-commerce role personally, it was very fixed income, data, and even post-trade processing was a much bigger deal, and clearing even. So that was like a 2000 to 2005 run up, and then an 05 to 10 consolidation. Obviously 08 happened in the middle of that. And I kind of think of 2010 to 15 as the dark years of innovation, for good reason. We needed to basically implement Dodd-Frank and MiFID and ESMA and all the different regimes around the world. So there wasn't a lot of new things, maybe some reg tech. But then I would say 2015 kicked it off lightly, a lot of innovation labs, et cetera. But then real companies have been built in that time. Symphony founded in 14, Cloud9 founded in 14, which we acquired. StreetLinks founded in 18, which we acquired. So, we're already sort of now coming into that phase of, by 25, I think a lot of the table will be set from what's been booming up, and that consolidation will happen. And some consolidation means things go away. A lot of it will be things get combined and tucked in, and then those things will become, future acquisitions for other companies. Like, if you just look at what happened with S&P, IHS, Market, and iPrio, as all companies now that exist in S&P, through a number of an LSE Refinitiv, right? So we're just, we're at the smaller level and the bigger level, and it's all hitting effectively at the same time across almost every vertical industry on the planet, which is unique.
Yeah, well, and what's super interesting is, Symphony effectively was a startup not that long ago as well, but then here you are sort of buying other startups. So it's the traditional way of thinking about consolidation, where it's some big incumbent who's then buying up the new tech. That's not the way anymore either, is it?
I think there's a playbook there. You have to be really careful to buy things that make sense, both as culture, business, and you can go through the I'm buying competitive thing, so I'm just going to take two competitors and combine and take cost out. The reality is, when you're doing a lot of new things, there's not a lot of competitors as much as complements. And the question is, how do you take those things and put them on a bigger platform? And that's what we think Symphony is going to do, at least in some way. I think partnerships are a much bigger deal now than they ever have been. You have to partner to win, and these partnerships may become consolidation plays, down the road as they get tighter. But the collaboration space is not a new one for us. Like, we had AOL and Yahoo in our lives deeply for 20 years as chat platforms, doing a lot of equities in nat gas oil. That was back 2000 plus. We had built a product at Market called Market Directory in 12 and 13, sold that to Symphony in 14. So this collaboration chat identity story is 20 years in, and people have really, I think, defined the space through the pandemic, but it's been around a while. And it's just now a big tech game and a vertical game, meaning financial services. And my guess is every vertical will find a champion to do things at depth while leveraging the broader consumer or institutional enterprise systems, that are out there and have been consolidated, like Slack into Salesforce, or Identity, LinkedIn into Microsoft.
Your point about co-opetition, I think, is a really important one as well, right? It is the world we live in. Like, you have to work with firms that maybe compete with you on some piece, but not on other pieces, because really there's still an opportunity for you both. And I see you doing that even, right? You guys integrate with other collaboration platforms even, which on paper would seem like it doesn't make sense, but if that's how your clients work, then you have to, right?
Yeah, you have to be open architecture on some level. If people want Zoom to be their video conferencing, we offer that service now, with Zoom at the front and Symphony behind that. We'll have other integrations like that coming. We have a lot of partnerships in fintech that we've announced with Genesis and Uncork and Access Fintech, Sapphire, and a number of others. So we're partnering with the fintechs, we're partnering with the megatechs, and the tech for fins, like in the blockchain DLT space, or compliance that are broad but still pinned to financial services. So we're doing all of those things, and I've always believed in co-opetition. I've been a consortia person for 20 plus years. There's a way to do that is additive. The challenge is when you bring competitors together, it gets tricky. Yeah. And I think the Apple-Samsung relationship was probably the best example of how crazy co-opetition can get, where there were lots of lawsuits in the IP of chips, but yet Samsung was the main provider of numerous Apple chips in their supply chain. So they found a way to have a supply chain over here and a pretty big conflict over there. We don't even have that level of conflict, but when you quilt things, you need that 20% overlap to make it sturdy. It's that 20% overlap that sometimes creates the friction and the challenge of cooperating.
Yeah. So in the world we're in today, you've done a lot of effectively M&A over your career, right? All the way back from the beginning through till today. What do you feel like is the thing that makes the deals work in the end? Is there? I mean, I know there's never a one size.
There is actually a formula. I'm not sure it's a pure science formula, but I'll go cliche. It's the people first. Right, John Chambers wrote a book, Connecting the Dots, who said he only acquires companies of great products, no matter how big they are, and people that he does not want to fire. Right, the assets you're acquiring are the people that built the product. So if you're buying competitive things, then you can't do that because you got to take a lot of cost out. But if you buy complementary things that are really tight on the people dynamic, life gets easy. Then I would say you need to integrate or not. If you're not integrating, you just say that. If you are integrating, you do that. And a lot of firms acquire a lot and don't integrate that well. And our industry has some examples of that over time, where it's run more of as a portfolio, where you sort of have a master agreement with the client at best, but your products don't look, talk, you have multiple Salesforce instances in your firm, all those things that make life hard 3 years out from a deal. So I think, have a really good vision going in strategically, get everybody on side with that, get the people side right, get the integrations right, and make sure that you're messaging very clearly to the market on why you're doing it and where you are in the cycle.
So if I go off script for a minute, so Cloud9, StreetLinks, you both mentioned, am I going to be able to make a phone call through Symphony, right? Are you going to bring those in and they're going to become Symphony?
Absolutely.
Brands will go? Yeah.
Yeah, so, we have two networks now that are really substantial. Symphony as a collaboration stack network and Cloud9 as a trader voice telephony markets voice platform. Very different markets. There's only a couple 100,000 trader voice positions in the industry, but we're not slamming the platforms together as much as making sure they can talk easily. And if you're taking multiple products, you can click to chat, click to call, click to get into a Hoot broadcast, room or whatever. And then really putting identity at the core of that, which is something that we are uniquely positioned to do, making sure that the right people are on your channels, whether it's email, chat, voice, or video. and bringing those together both for surveillance, but more importantly, business intelligence. So, and making it really seamless from a user perspective. So those are, but at the end, Cloud9 was a real business with a lot of real clients, standing up every day and relied upon. So we had to be really thoughtful about how we integrated the company. It was about 80 people. We took sales and kind of put them together quickly. And we're really working at the back end now in the last half of the first year of our plan of integration. StreetLinks was 10 people, earlier stage product, a bit lighter as a product in a tech. So that was pretty much kind of folded into the company, within about 2 quarters. And the leadership has been sorted, between the two, and some of the leadership of both companies are now, our CRO is now Gary Gotcha, who was the CEO of and founder of StreetLink. So we had a plan. We changed some things when the facts changed, but generally we think we're doing a decent job at the integration side, and we've gotten the people side right so far.
That's great. So obviously all of that's part of your collaboration story. When we hear things like collaboration economy, or even we'll talk of Web3 and DeFi, like it's a lot of buzzy words that we all like to talk about, and I admit sometimes we write them too because you can't not. But what does that really mean? Like, what does that mean day to day? What does that mean to the end user? Like, is this really changing things as much as it sounds, or are we really just taking incremental steps towards something new?
No, I think collaboration economy is real. Zoom is very impactful. Teams is rolling out. Slack is a really meaningful platform in places. WhatsApp, WeChat, text, Telegram, Signal, DMing on Instagram, chatting with someone in Fortnite. These are all social networks, or LinkedIn. I do a lot of DMing on LinkedIn because it's a way to go through time without having to know people's email addresses.
Sure.
But they're professional relationships, but they're not compliant in reality. From a lot of my clients' perspectives, I might be able to do it as Symphony, but people at JP Morgan and Goldman and BlackRock really need to be on systems that they're required to be on. So we are definitely working heavily on, we would love for everyone to be on Symphony and just chatting directly in a highly secure network, and that would be wonderful, but that's not the way it works anymore. Mm-hmm. So now we have federation technologies that allow us to get WhatsApp, WeChat, and SMS integrated from a Symphony user perspective. So your wealth manager client, your banker type client, whatever, they could be wherever on the system that's consumer, but your identity is Symphony. Same with Zoom, at the federation level, really. And then, really just thinking about that as a continuum, and anything that is business, and we think we can deliver a lot of that. And it's a communication play, I'd say, more than just even a collaboration economy now, especially when we bring in the professional telephony, which we have.
Sure. And the privacy, the cybersecurity angle, which was really how Symphony came out of the gate all those years ago, that's become prevalent, as we talked about before, well outside of institutional finance, right? It's really just prevalent in life now. People are more concerned about, like you said about Signal, right? More concerned about privacy and security.
No, it's the world. Obviously, the regulators to different degrees, whether it's GDPR or California, self-sovereignty, creators taking rights over the data they create and being able to track it through the ether for good, for audit reasons or just to monetize their own content. Right, that happens in the media space now over 25 years of Napster. I'm sure I'm dating myself, and people listening here don't know what Napster is, which is
Napster was the best. Napster was the best.
I never used it, by the way, but I hear it's very good. Or what I exchanged, I had the rights to exchange. So I think there's a lot of things in communication. I mean, if our society and humans are anything, we communicate. Our industry has been, if we're anything, our markets are people communicating with each other. It's just gotten a bit more digital or electronic. So the phone matters, the video conference matters, the chat matters, the email matters, but somehow they have to be brought together without smashing them into a new box.
Yeah. No, so it'll be it's been a very interesting few years. It'll be an interesting few to come. So let's get into market structure a little more specifically now. I guess, why don't I start with the big question? Like, what are some of the big challenges or sort of things on your list from a market structure perspective that you're spending time on right now?
I think the boundaries of sort of raw tech assembled, and then places that are regulated, right? There's a real conversation going on there. And I know you're aware of it through different initiatives in market structure and the regulators, thinking about what needs to be where. And the securities world, the SEC's obviously put something out on that. Where does the match happen? Who's responsible? What systems need to be understood and maybe at least viewed by the regulator, maybe not regulated, but there's so much dependency on these things now. I ran a quasi-regulated business at Market called Market Serve for con firms, which didn't have a place to be regulated, but we had a light touch with the FCA, which we liked because we thought we were really critical infrastructure, and it was odd that we would be totally out of the net. But there wasn't a place to put us in the way clearing, settlements, and exchanges, et cetera, and CEFs were regulated. So obviously, the SEC is taking a more expansive view of that in securities. Different platforms like us or EMS platforms need to figure out that boundary clearly, where that gray area might be, and educate ourselves in the market as to how we blur those gray areas or deal with them, because there's always going to be a gray area of where's the match, who's responsible, what's the systemically important system. So it's complicated, and it's across every asset class across the whole world, but we're quite regionalized on almost every level. Even in the US, there's multiple regimes between banking regulation, futures regulation, and securities regulation.
Yeah, I mean, I think you're right. So the SEC is an important item. I think that'll be something we'll all be spending a lot of time on through all of 2022 and probably into 2023. But yeah, that idea of if traders are negotiating an order, say in a chat room on Symphony, does that make you an exchange? I assume that's something your team is sort of thinking about. And I know it's very early days in the proposal, but.
No, I remember the words in Dodd-Frank, as soon as technologically practicable. I think you might remember that one statement that I think we probably spent a year discussing at least when I was at Goldman. It's a really, you need to get things done as soon as technologically practicable. Well, that depends on a lot of things. And, tomorrow I can tell you it's different than today because things are not getting slower.
Sure. Yeah, no, there's going to be a lot of digging into the details, and the devil's in the details, right? I'm sure we'll all be spending some time in Washington over the next 6 to 9 months to work through this. But it does seem like, to your point, though, it does feel like a good step forward to put some more guardrails around, some more rules on paper, so everybody sort of understands, what they're working with and what they can be comfortable using.
Nobody likes rules when it limits their ability to make money, but I believe civilization needs rules to be organized, and you need to know where the boundaries are. Obviously, the digital asset crypto space is going through their transition now, and we'll see how platforms like Telegram and Signal do. Yep. As there's quite a bit of activity there that probably needs to be, at least tethered, if not, put onto systems that are, natively compliant and more safe.
For sure. So one of the other big items that really is in your wheelhouse since the pandemic, right, is the idea of sort of managing employees remotely and all the regulatory requirements that come along with that. So how has that progressed, and is that what else are you thinking about there? What else is Symphony doing there to help with that situation for those that use the platform? Yeah,
well, I mean, it's really been fascinating for me because I came to a company that we use our product every day to do our job. We also use our product to communicate to our clients, and we are a big part of the DeFi remote work movement. So we're sort of right in the middle of this, and we have to think about that, not just for how we run and who comes into the office when, but more deeply because it is what we are. I've taken on the view that the future of work in terms of work-life flexibility will be like software, right? It's going to be a bit more nuanced, I think, than 3 days in office, 2 days out. I think we've all bought for jobs that are not pinned to going to office. Like if you're the receptionist at a firm or you're a committer trader, there's just roles that you're just going to be coming into the office more. Certain developers can come into the office episodically, right? It's just because you can really see what they're doing performance-wise just based on the code they're creating. For the rest of us, which is probably 80% of the planet, I think we just bought like 40% flex. And that flex needs to be used wherever it makes sense, and you sort of manage to adults, meaning like you assume people are doing the right thing. If we say it's a 3-day week, I can guarantee you everybody wants to be on Monday, Friday. So it's just not that 3-5 thing. I think it's more 40% flex, like a good software platform, but 60% of the time, you know exactly what it is and it's doing exactly what you think. So I think a bit more modular, more flexible, more fluid, more available. I think what we now can do is work at the edge, which is kind of wherever you are, not your home or your office. It's just wherever you happen to be doing work, which could be like literally roaming around the cafeteria, just pecking a message out to someone as you're grabbing lunch.
Yeah. It should be missed by nobody how markets and the economy in general has continued to function obviously quite well with this new environment. So it's going to be pretty fascinating to see how 2022 goes, hoping that we sort of are on track to be at least allowed to get back to doing more normal things, even if life doesn't go back to the way it was.
Yeah, nobody thought a lot of what's happening is possible 5 years ago, and the tech has certainly helped that. But now it's got people thinking they can just live in the meta all day and sit away from humans interacting at a physical level, which I don't think is optimal.
No. We need a balance. We all need a better balance, and hopefully we'll get that this year. So if we try to end on a very sort of cool forward-looking note, quantum computing seems to keep coming up. I know you and I have talked about it a little bit. On one hand, it's 10 years down the road, but then on the other, it's something we can't ignore now. So can you explain a little bit even what that is? Because I'm not sure everybody would really be familiar, and then why should we care?
Yeah, and I can't go too far on it because I'm not a quantum physics mathematician, trained. No, but I can play one on TV in a really bad Bravo show. It's just a completely different way of computing that is it's not about the laws of silicon or how we've got, a 0-1 down a path of optionality at faster and faster speeds, a la the Pentium chip and Moore's law. It's a totally different way of computing that can run more parallel compute, more detached from the metal, like technology is assembling a lot of metal from copper to silicon, the chips to the transistors, et cetera. So once you go into what I call a more organic compute world, which is quantum, not sure it's truly organic, but it is different in measures in qubits versus bytes. You can just do things, they already know that these are thousands of times faster than anything we know is possible when it has to move through metal. They're still trying to figure out the applications for that, but there's so much investment in it. And the reality is, you're going to detach from your data centers, right? You'll have serverless worlds. You'll have headless applications, meaning it's just a process behind a UI that you don't even see happening. And even applications, I think, are going to become much more transient or even non-existent, versus a process that runs and evaporates the moment it does. So over the next 5 years, there's going to be real applications in quantum. I would say by 2030, it's kind of in our lives in enough way that because of the speed increase and the detachment from what we think is secure from the chip up, you just have to think about encryption and security in a completely different way. We have to, because we're an encrypted secure platform, and the theories of quantum proofing are all Bitcoins will be cracked, all RSA multi-factor random generator number will be cracked, and the encryptions that we all base our encryption technologies on, which are consistent on planet, will all be hackable in that moment. So we'll be way in front of that as a world and as an industry, but it's something to not put off 5 years. It's something probably in the next couple. You have to put some real thoughts to that. Detach from metal, move to a speed that we just can't even fathom today in terms of replicating data around the world without having to move it all day.
Yeah, and then which is much more impactful than faster high frequency trading or better quantitative investing strategies, right? That's a much bigger story to keep an eye on.
And it's a bit of a vanishing point into a singularity versus an expanding point that sort of expands infinitely. Like you're going the wrong way down the vortex if You're just locked into the chip dynamic today versus the quantum future.
Yeah, which obviously cloud computing in general has brought a lot more compute power to the world and made it more accessible. But this, again, like you said,
but the cloud, to be clear, cloud's a data center, right? It's just managed by someone who's better at it. It's still metal boxes serving up multiple servers to run your compute and store your data.
Yeah. So what else should we be ready for sort of in Symphony? I'm on there. Anybody list, just find me, search me, chat me. It's very cool. I'm excited to be on the platform, but what else can we expect? What else should we look for? What's exciting for you as you look at the roadmap?
I think is this idea that we can actually work together to a great outcome and win individually. Like this is an investment world, not a trading world. Like trading is a bit zero sum if everybody's marketing their books, right? You win, I lose kind of thing. This is an investment game where we can all win. We'll all thrash around and bump into each other and create some friction. But I'm really excited about the ability to work with the largest tech firms, the smallest startup fintechs, and the street in general, the buy side, the sell side, and all the providers. So it's just going to be a much bigger mosh pit, or multiple mosh pits in a good way, if you like metal, which I do. So I think it's that story that's going to pull through in the next 1 to 2 years. And, you know, those that want to remain in their island on a box, you know, kind of hoping things don't change as much or as fast, you know, you can read books about them. It's probably The Innovator's Dilemma is the best.
Yeah. I mean, in our trends to watch this year, we talked a lot about interoperability and having that move beyond the 30-year-old fixed protocol, right, and really allow apps to talk and do it quickly without a lot of programmer.
Then I just want to be tapped on the shoulder like my phone to say, here's an alert, or here's an Amber Alert, take a look. I just, you know, we all just need that tap as we're locked into whatever, you know, Yellowstone episode we're watching.
Yeah, no, great. Well, Brad, this has been awesome. So much. We covered a lot of ground in a short amount of time. So excited to see what else 2022 has in store for you and for Symphony.
Well, thanks so much, Kev. It's really a pleasure to just be around you for decades now and to see it all coming through in a really exciting but you know, complicated way.
Yeah. This is so comments from 2 Gen Xers. So let's let's see what comes next. Great. All right, great. Well, thanks again, Brad. Thanks everybody for joining us today, and we will see you again soon. Thanks so much.
Thanks, Kevin.